I would like to share some thoughts about insurance fraud with you today. And my question to you is, why should we worry about insurance fraud? Because if we look at several studies, for example, in Finland, about 27% of the people who had been asked admitted that they know a person who committed insurance fraud. When you ask people who overstated their losses, the answer was that about 42% they justified it because they said the premium was already too high. Or more than a third of people said, well, the service was very poor. So it seems that in the society, it is somehow accepted to commit insurance fraud. But what does it mean this for our insurance concept and for the idea of insurance? Well, let's have a look at the characteristic of the insurance concept. Well, the basic idea is, of course, to share risk. It's a cooperative idea. It is a community of people, of companies who have to cover, let's say, for losses which happen to one company or to an individual. And of course, insurance is not a charity. So having this in mind, this means insurance fraud is every economic benefit that somebody obtains from the insurance process. So this means insurance fraud can be on the underwriting side, but also on the claim side. So in underwriting, as we also heard in the morning, it is the risk assessment which is extremely important. But you can do only a good risk assessment if you have good faith in the information that is provided by the applicant. So if somebody is cheating on the information provided to the insurance company, you cannot do a good risk evaluation. And insurance is not gambling. It is about evaluating the correct risk and to attribute the correct premium to this risk. So underwriting fraud means somebody is trying to obtain a lower premium by giving untrue information. Now, what is about the claims process? Well, in claims, the idea of paying a claim is to allow contingency in life after damage, if the house had been burned, if the car had been damaged. So the insurer is helping the persons or the people basically to continue with their normal lives. But again, also here, the amount should not exaggerate and should not be higher than the real damage. So the amount of payment should be linked to the practical loss. So fraud in claims means either that somebody is giving misleading or untruthful information or is over-exaggerating the real loss. Now, actually fraud hits the DNA of our insurance concept because it is an unfair cost to the honest policyholder. So it is a matter to worry about. But what would be the size of fraud? Now, this is, of course, extremely difficult to answer because nobody can really say the final number because you only find some information about the cases where you identified the fraud, and you don't know how many you didn't identify. But nevertheless, there had been several studies, and most studies, they link fraud to the percentage of paid claims. So let's have a look in Europe, what most studies revealed. So for example, in Sweden, the Swedish Association revealed that about 5 to 10% of the paid claims are fraudulent. In the UK, 6 to 8%. In Switzerland, about 10%. So let's look outside Europe. Australia, about 10 to 15%. America, 8%. And on underwriting fraud, as premium leakage, they estimate about 4%, where people declare wrong information to obtain a lower premium. So I think it's fair to say, overall, we can estimate that about 5 to 10% of all paid claims are fraudulent. Now, this sounds quite high, but what would be the impact on your P&L? Let's take a very simple example. You have a company with a combined ratio of 98%, and let's assume the loss ratio is 67%. And within the 67%, you have also 5% payments because of fraud issues. So this would mean that on your combined, actually 3.2%, you would pay out because of fraud. If you would now reduce your fraud by 50%, this would drop from 3.2 to 1.6, which would you increase your profit from 2 to 3.6% on a combined ratio of 98. which means an increase in your profits of 80%. Let's have a look at underwriting. Let's assume there's a premium leakage of 3%. And again, we can identify 50% of this leakage, and we can allocate this to your profits. Then your profit margin would increase from 2% to 3.5%, an increase by 75%. So as you can see, by successful fighting fraud, you can improve your combined ratio by 1.5 to more than 3 percentage points. And this, in some markets, makes the difference between a loss-making operation and a profitable operation. Now, how to fight now fraud? Because it's a very complex matter. We at FIAR, we are using different methods. So we start, let's say, with the most simple approach. And most of you have this kind of expert rules probably already in your IT system embedded, or if it is not in the IT system, at least it is in the heads of your experienced claims adjusters. So this means based on known fraud pattern from the past, you have developed some rules. And if something happens according to these rules, you can flag this kind of claim and you can do an investigation. So a typical example is if the inception date of the policy is close to the accident or the accident date close to the inception date, this is something suspicious, so you would start investigation. So this is easy to depict because these are known fraud patterns. The same applies if you know the fraudsters. So if you have a blacklist, because if you know that somebody committed fraud in the past, he might be also more likely to commit fraud in the future again. Now here it is, of course, very important that companies are sharing this information between them on a market level, because we want to avoid that a fraudster moves from company A to company B. But again, it's pretty straightforward. It's getting a little bit more complicated when we talk about unknown pattern. And here we have to use some mathematical methodology like anomaly detection, where we compare, let's say, the fraud declaration process with a peer group of similar cases, and we see what is, let's say, outliers, and then we have a kind of indication that there's something goes wrong. Or we can use, if we have unstructured text, for example, unstructured data, which is not in your systems, but it is maybe in free text, like in a claim declaration, or in a surveyor report, or in a police report, or in a doctor report. We can search these kind of documents for keywords to see, because there are some keywords which are linked more probably to a potential fraud case. And then based on all this kind of experience, we can build predictive models, which means we could automatically scan then new declared claims, and we can identify in these new claims automatically which of these claims have suspicious elements. And then the last and, let's say, most complex method is social network analysis. So here we don't talk about Facebook or Twitter, but we talk about trying to identify the dots between the different involved parties. So looking if there's a relationship between the claim and the policyholder, maybe to some lawyers, maybe to a repair shop, maybe to some agents, maybe to a police station. And if you reveal these unexpected relations, then you can identify very easily, for example, staged accidents. We have seen cases in Malta, for example, where people staged accidents, and at the end, more than 21 people were sentenced in the court because they did the same way of staged accident to different companies. And of course, development goes on. So currently we are researching, for example, on photo manipulation, because more and more insurance companies are digitalizing their processes. So this means they are asking their customers to upload photographs of the accident. But nowadays it's extremely easy to manipulate also the photographs. There are some apps which within 15 seconds you can make a newly car, you can make it a damaged car. So there are now methods also to identify automatically if a photograph had been manipulated. Some companies in the Netherlands, they are using also voice detection as a kind of method, where they try, when a customer declares the claim, to identify due to intonation if he's saying the truth or if he's lying. But all of this is still not, I would say, fully sophisticated. So probably it can be a nice add-on, but it will not be the single source of truth. So for fraud detection, it is necessary to have a hybrid approach. And we summarize all these kind of results into a FIAR score, And this FIAR score determines then the next steps in your claims handling process. So it is easy to use for the claim handler or for the fraud inspector. Now, you might ask, well, this sounds interesting, but maybe it's very expensive. Well, actually, when we look at our clients, what we have seen is that most of our clients have a return on investment within the first year. So setting up the system, implementing the solution, and then looking what are the additional benefits, this is usually covered within the first year. And then after the first year, we are aiming to generate an additional benefit to our clients, which is at least 5 times higher than the yearly cost. So it's a strong business case, and it is something that will really help to improve the business result of our clients. But we don't want only to improve the result of our clients, we also aim for supporting honest insurance, because we believe it's really unfair that the honest policyholder has to be burdened with this kind of cost. Thank you very much.